Welcome to the IREL podcast. Are you sick and tired of real estate gurus pitching their next pre-construction deal only to find out years later they were completely wrong? Worried the next overseas conference you spend thousands to attend will only be used to sell overpriced lots and deserted developments? Join thousands of other international real estate seekers who are looking for their place in paradise without the sales pitch. Straight from your host, Taylor White.
Hey, podcast listener. Welcome to the Overseas Property Insider Podcast. I'm your host, Taylor White. I am proud to say this episode is brought to your earbuds, courtesy of my friends at HomeAway. If you're a homeowner or property manager and want to put your vacation rental in front of over 62 million travelers each month and earn incredible returns of up to $56,000 per year, then you must list it on the #1 vacation rental marketplace. The best part? Listeners of this podcast can get started with zero upfront and traveler fees and only pay for the bookings you receive, meaning you only pay when you get paid. Head on over to irelpodcast.com/rental to get started. I can't wait to share a newer way to invest and get capital for real estate when I sit down and speak with Isnt McDaniel from Tycoon Real Estate and coming to your earbuds from Silicon Valley in San Francisco. Isnt and I will be talking about crowdfunding, where investors can group fund deals posted by those looking for capital called Dealmakers for as little as $1,000. Specifically, Isnt and I will discuss what exactly crowdfunding is and why it's revolutionizing how real estate deals are getting financing, what types of opportunities are available and how they can be sourced, where listeners of this podcast can go to get financing for their own deals, and much more. Instead of telling you more, let's join Aaron from Tycoon Real Estate's headquarters in San Francisco. Aaron, what's going on? It's Taylor White. I'm excited to have you on the podcast, straight from Tycoon Real Estate headquarters, so we can get to know you personally. Tell us a little bit more about yourself.
Sure. Taylor, thank you so much for having me. I'm very excited to have the opportunity to talk about Tycoon Real Estate and real estate crowdfunding. I am based in San Francisco, California, a Bay Area native. Have experience running a number of different companies in the tech space, however, have been always very passionate about real estate. And so I saw a great opportunity to bring that passion for real estate and some of the expertise I have around other businesses I've run to be able to help revolutionize the way people invest.
So, Aaron, I couldn't wait to have you on about a newer way to invest in real estate, which is crowdfunding. Can you talk more about your company, Tycoon Real Estate, and its overall business strategy?
Sure, absolutely. So I think there are a few issues or problems that people traditionally have that Tycoon solves. And so right now, typically, especially when you're first getting involved in real estate investing, it can be very expensive. And what you generally have to do is put all your eggs in one basket, unless you have a huge windfall or come from a wealthy family of some kind. You typically are saving up your money, and it is a bit nerve-wracking to put it all in one place. And I think we're all familiar that one of the top, if not the #1 rule of investing is to diversify. And it's very hard if you're, again, putting all of your eggs in one basket. And so when we looked at the market and we saw there was a really big tide changing and growth around the crowdfunding industry, for example, going from 2012, I think there was about $2.7 billion that were invested through crowdfunding platforms. In 2013, it was over $5 billion, I think 5.4. So it's about doubling year over year. And so we saw an opportunity to solve some of those issues. The other thing on the other side of the equation, because this is a two-sided marketplace, we allow investors to be able to invest in properties, but we also allow for people who are looking for capital for their deals. We call them deal makers. Others would refer to them as sponsors. We allow them to bring their deals to the platform and access a new channel of capital and really plug into the power of the crowd. We think there are a lot of benefits to that, even on the borrower side, so to speak, or those giving up equity in their properties, because they can, again, tap into a larger group of investors.
So, Aaron, for people that have first heard about this concept, can you better explain what real estate crowdfunding is?
Sure. So there are a lot of complexities around it, and there's still a few things that are actually up in the air. So in 2012, a law was passed that was called the Jobs Act, Jumpstart Our Business Startups. And over the subsequent months, the SEC has been building what their plan would be to implement that. And there are two pieces to the puzzle that are the way this is manifesting. Is one is relaxing some of the rules around general solicitation. And an example of that is speaking specifically about a deal and its terms in any kind of public forum. So technically, if you had a company and you were looking to raise money for it, and you went on Facebook and said, "Hey everyone, I'm looking to raise money. Here are the terms," that would technically be illegal under general solicitation rules. And so they're looking to relax that a little bit to be able to allow for specific offerings to be shared and posted. And then the other side of it has to do with who can invest. So traditionally, and as it is today, through most of the rules of the SEC, only accredited investors can invest. Now, an accredited investor, for those who aren't familiar, and this accreditation only applies to those that are in the U.S. If you're an international investor wanting to invest in the U.S., it's a little bit of a different rule. There's less of these restrictions. But essentially what the SEC has said is that if you have made over $200,000 a year over the last 3 years, and if you're single, if you are married, it would be $300,000. Or if you have a net worth of over $1 million, then you fall into the accreditation category. It's not a test you take or anything. It's just meeting those thresholds. And so if you are non-accredited, there are restrictions of what you're allowed to invest in. And so the proposed rules are looking to change that. So in a structured fashion, people can invest, not unlimited amounts, but controlled amounts if they happen to not be in an accredited category. So that hasn't happened yet. The SEC has posed at the end of last year in the fourth quarter, said, here are the rules that we're looking to propose. Here are the thresholds. Offer comment. They closed for comment at the beginning of this year, and we're waiting for them to either come back with a revised plan or to come out with, here are the rules that everyone can now invest in.
So then, Aaron, we have listeners from over 68 countries. Mm-hmm. Is this just for real estate investments inside the U.S., like California, or is it also for outside the U.S., let's say Panama?
So that's a great question. You know, I am not 100% sure how that would work, but typically because of the SEC's span of control being the United States, I believe it's mainly within the United States. However, I would definitely talk to an attorney who's familiar with that. I'm not prepared to be able to give that type of advice, but that's a great question.
So then, Aaron, how can my listeners invest in a crowd-funded real estate investment?
Now, as an international investor, as mentioned, that there are fewer restrictions, and so the accreditation is not as big of an issue. But essentially, they can go to platforms like Tycoon, and you're able to then review and analyze any opportunity. There's a forum for us, for example, to ask questions about the deal, to be able to connect directly with that deal maker, and then from there, you can go through a process to fill out a questionnaire that's online, do the DocuSign we use, e-sign documents, and then be able to do an electronic funds transfer through the site, through an e-check from a bank account. So it's a pretty seamless process. And then from there are certain safeguards we obviously put in place where we create a legal entity, an LLC, that represents the group of investors to protect everyone from their own personal liability. And then there's certain standards that we have with our deal makers to protect our investors. So typically we only allow secured investments, for example, where that LLC is listed on title. And so it allows, as mentioned, just for you to be able to diversify your portfolio. You can, instead of taking hundreds of thousands of dollars, which is typically needed to invest directly, you can invest on our site for as little as $1,000 into a project. And so you can even take, let's say you normally need 100,000, you can take 20% of that, take 20 grand and put it in 4 or 5 different properties to be able to, again, diversify, to mitigate some of your risk and take advantage of different trends in different areas. So instead of having to say, well, Miami, for example, being a hot market, I have to put all my money in one place, you can be able to distribute it in the San Francisco Bay Area and Miami and Chicago and New York, and with that same amount of money. So it really lowers those barriers and helps you invest in a different way.
Well, that's awesome. So then what are some of the legal constraints real estate crowdfunding has?
As mentioned, a lot of it is dictated by these rules. Now at this point, any deal that has happened or is being raised right now, and this is the same for Tycoon deals, we are aligning with SEC rules, which typically we fall under Reg D. And in doing that, there are certain restrictions of how the deal can be disseminated. And there's other regulations like Regulation A that offers a lot more groundwork on the front end you have to do, but can be open to taking more investors. So it just really depends on that rule. And typically in our posting, we share what type of rule it is that they're going under. But we are adhering very strongly to the SEC's current rules until they officially implement the changes from the Jobs Act.
So then talk to me better about how my investment is secured or protected in the process.
So as mentioned, one is the LLC that is created. So it's all you can lose is up to the amount that you put in. And there's nothing guaranteed, right? But I think the real benefit and the reason why crowdfunding is made for real estate even more so than the attention it's getting for funding startups is because it's tangible. And if you were to fund a startup, and maybe this is just part of me being in the Silicon Valley area in San Francisco, a lot of the crowdfunding is focused on funding new companies. But I think over time, what people realize is that 9 out of 10 of these companies will fail. And we may understand that, yes, a lot of them fail, but what that means in these terms is that 100% of your money is gone. That's just the way it is. It's gone on pizza and beer and people coding things, right?
Right.
However, with real estate, even if things go badly, there is still a physical asset, and it's tangible, and there is a certain value in it, and so something can be regained. And so, as mentioned, that legal entity protects you from liability, and then being secured on title offers that claim, as opposed to just something that's more off the books. It's something that's generally officially with the county of where the property is.
So then, Aaron, you just said that nothing is guaranteed. Could you maybe better explain some case studies or some things that you have on your site, some example returns that people might look for or might ask for or that might be there? Sure.
So to put an asterisk on it, past returns don't necessarily equal future returns as well, right? Future performance. Just from a legal perspective, saying that we do have a learning center which offers resources that we're building literally every day to be able to help teach people about real estate investing, to understand things. There was actually an article that was just published today about the capital stack, talking about debt versus equity and senior debt, mezzanine debt, and how all of that really works in relation to each other. So we're looking to really help educate people.
So let's say I have a minimum investment, just to keep the numbers easy, of $100,000, just to keep it easy. Yeah. Are returns based off of something like, hey, you get 10% return or 8% return, or does it depend on the deal?
So it all depends on the deal. So in the example, you had asked the past performance. So for example, a recent deal in San Francisco received an annualized return of 10%. And it'll fluctuate depending on whether it's equity or debt. What I have seen typically with these type of crowdfunding deals is if it's a debt position, they tend to garner anywhere between 7 and 10% annualized return. And when I say annualized, that means that if it happens to be longer or shorter than a year period, it would adjust proportionally. But typically, those are the terms that you talk in terms of. If it's more of a longer term buy and hold apartment complex, for example, I've seen typically it's a 4, 5, 6% cash return, which is almost like a dividend that is received either monthly or quarterly, and then typically with the appreciation somewhere between 10 and 12%. So you're looking at anywhere from 15 to 17% internal rate of return on a property for those types. So it really does depend on the specific deal, but those are just some ranges that we have seen.
Aaron, how does someone become a deal maker?
It's fairly simple. So you have, at least through our site, you go to the Raise Capital page and you're able to fill out a request. And that allows us to understand you better and understand the type of deal. Now, there are some restrictions around us being a filter to be able to say who can and can't post things. So we like to be very clear on the fact that we're not necessarily being a complete door and saying who can and cannot go, but there are certain standards that we have and certain experience levels that a deal maker must have. So we're not looking to work with people who are brand new who've never done a deal before, but those who have a lot of experience. For example, when in doing some short-term residential deals, some flips in the San Francisco area, we work with a company who's done over 150 of them. And
Oh, wow.
they have a pretty good background in it, 20 years of experience. And so ultimately that gives us, in addition to some of the legal things that we put in place in securing the investment, that puts us in a comfortable position that our investors know that they're working with someone who understands what they're doing, has a lot of experience in it.
So, Aaron, I'm curious, if I'm a deal maker, what comes first, the property or the money?
So that's a great question, a little bit of a chicken and egg thing, right?
Right, exactly.
However, typically what we ask is that deal maker has some form of control of the property. We don't want you to go and ask for money on something that could be taken out from under you because you don't have a claim to it. So whether you have an option on the property or even if you currently own it or you have it in a period of escrow, that would be better for us to be able to get that time to raise that money.
Okay, so then what if the money that is needed isn't enough? So the funding goal hasn't been met yet. Then what happens?
Two options. So either one, the deal maker can say, you know what, it may not be the full amount, but I'd still like to take that money, and they would be able to proportionally adapt the terms. So let's say they asked for $200,000 and the platform was only able in the short period of time to deliver $100,000. Then they could say, okay, that percentage ownership we talked about, let's give it half that amount. So ultimately, the dollar for dollar that an investor put in is exactly the same. And if they choose not to do that, they say we want it all or nothing, then 100% of the money goes back to the investor. So if you were to put it out there, 2-3 weeks pass by, it ends up not funding, then you get 100% of your money back.
And then just curious, out of deals that have been done so far, what's the average minimum investment that most people put in?
I'd say the average minimum we're seeing is around $5,000.
And then most of the people, do they put in the 5,000 or do most people that get involved, do they put in more?
It depends. I think early on in a platform around that amount is good. People obviously want to build a relationship, which is something we're looking to do. And so
Right.
and that involves building that level of trust. And so it's not about saying, okay, we want huge amounts of money now. It's feel something you're comfortable with, test it out. I mean, by nature and some of the things I was mentioning before, this is a great way to be able to invest in smaller increments. And so that's an easy way to do it.
So then what control do I have as an investor over the decisions that need to be made for real estate projects that I put my money in?
So this is an LP or a limited partner type
Right.
relationship. So there's not an active day-to-day. And if you look at it from the deal maker developer's perspective, it would be a nightmare, right? If they had 100 people who were saying that they needed to have any kind of say or decision making in the process, and so we're wanting to make it as simple and easy as possible for them. So typically that is something that onus and that decision making power is with the general partner, is with the deal maker, and that's part of the reason why we only work with experienced deal makers, because we feel that they're in a better position to make good decisions. But at the same time, we have some oversight in our platform to ensure that investors aren't being misled and that the plan for the property is being executed.
So then do the investors have any communication channels open to deal with the deal maker?
Absolutely. So through our platform, there's a messaging mechanism for investors to be able to interact with the deal maker, ask questions, get updates. And then there's, on our back end, there's other things around getting tax forms that are needed on an annual basis and other communications.
So I'm curious, what types of deals can investors get involved in with crowdfunding?
Really all types. I mean, with our platform, we look for residential, commercial, we look for long-term, we look for short-term, we look for equity positions, we look for debt positions. And that's really the beauty of it is allowing for you to be able to take a smaller amount of money and put it in multiple types, whereas it would be very difficult to have to put all of your money into one place and take a risk as opposed to testing out the different vehicles you like. And it also could be a thing where it would allow you to invest in multiple types of assets to decide where you want to double down and put more investment later.
So, Aaron, I hate to go here, but I'm going to go here. What are some of the tax ramifications of investing in a crowd-funded project?
So, not being an accountant, a lot of
Right.
it will depend on your specific solutions. Each investor has their own different nuances. But what we do is we help facilitate the tax preparation process, and so we provide you with a K-1, which is a designation of the performance of the LLC that's representing the investors. And so you're able to, if you have annual cash payouts, or if the deal closes and there's the final payout on the deal, it would be tabulated properly according to the amount you had invested.
And then, Aaron, I'm curious, how does your company, Tycoon Real Estate, make money off of this?
Sure. So we actually do not charge the investor. The only charges we have are to the Dealmaker, who is benefiting from allowing to have this access to additional capital. And so typically we charge them through basically an advisory fee for bringing the two parties together, sort of an acquisition fee, if you will, for bringing the investors and the deal together.
So is it kind of fair to say that this is the startup model as far as funding for real estate?
Yes. However, what we're dealing with here is not rocket science. I mean, it's literally happened for decades, if not hundreds of years. People have come together to group invest in real estate. However, typically it's only done behind closed doors for the super wealthy. And I can see why some of things have happened the way they have with a Dealmaker. Would you, if you were looking for capital, would you rather have $1 million come from one party or from a couple hundred? You'd probably choose the one, because there's a lot of coordination and a lot of issues associated with that many people. However, with technology, with crowdfunding, with what Tycoon is building, we're able to make that large group of people seem like one person to that Dealmaker, and make it a lot easier to be able to allow them to still operate their business as if they would, but be able to, again, access capital from more people.
So, Aaron, I would love to wrap up our call with action steps if we can. What might be some final tips or strategies you might want to recommend for people listening?
So one, I think, is educating yourself further, just understanding some of the details. We could talk for much longer about some of the things we're talking about real estate crowdfunding, but being able to understand the legal side of things, especially as law is changing. However, I think from there, it's getting comfortable with the right platforms that you want to invest through, because the dollar amounts are so much lower than typically needed to invest in real estate. That allows you to be able to test out the ones that work for you. And what I would recommend in terms of Tycoon, if you want to take a look at the different deals that we have on our platform, I think you'll get a better idea of some of the things we have to offer. We're continuing to expand every day, both in terms of type of deal as well as geography. And then look at our learning center, which, again, is having these resources built out to help you understand real estate investing a little bit if you're more of a novice.
And then, Aaron, what are some of the best ways to follow and connect with you and all you guys do at Tycoon Real Estate?
Sure, absolutely. So our website is tycoonre.com, tycoonre as in real estate. And feel free to contact me directly. My email address is Aaron, AARON, at tycoonre.com. You can also reach us at our 800 number, which is 888-646-6242.
Love it. Thanks again, Aaron, for coming on, and I hope we can chat again sometime real soon.
Wonderful. Thanks so much for your time. Appreciate it, Taylor.
I want to thank Aaron once again for coming on the show and breaking down crowdfunding and how his company at Tycoon Real Estate is revolutionizing how real estate gets financed. You can head on over to our site for complete show notes, easy ways to connect with Aaron, and more information about his fantastic business at Tycoon Real Estate. And don't forget, if you're a homeowner or property manager and want to maximize your rental returns with no money out of pocket and small booking fees, then I have the solution for you. With exposure to over 62 million travelers each month and incredible returns of up to $56,000 per year, there's a lot to like at the #1 vacation rental marketplace in the world. Head on over to irelpodcast.com/rental and get started today.
You have been listening to the IREL Podcast with Taylor White. Be sure to hit up irelpodcast.com for more. That's irelpodcast.com. Thanks for listening.